Welcome traders, freetradingvideos.com. Here's Breakout. I'm going to take you through a trade idea. Here's a trade I tried to execute yesterday, but I couldn't due to having too large a position short on E-mini futures, and the margin requirement is too high to take this trade as well as. So I'm going to take you through this just so you can get an indication of the thought process, and also want to take you through the management of this. So here we have the NASDAQ, or NASDAQ 100, NDX. Trading options on the NDX is basically my favorite trade. It's a high income trade. It's extremely volatile. It has a huge beta on this index, and you can make a ton of money. Now, if you don't know what you're doing, you're going to lose a ton of money. So if your trading stats are not up there, do not trade the NDX. If your trading stats are, start experimenting. You'll love this trade. So yesterday we had this move down in the market, and we had the financials holding the market up. It was the only sector in the market yesterday that was actually positive, and it did actually go negative for a period of time, and then obviously you had the buyer step in and hold the market up. I don't know who would be buying financials yesterday, but someone was insane. Anyway, they failed today. They tried to do the same thing and failed, so I was happy. Back to the trade. Yesterday we had that move back up in the market, and with where the S&P was positioned, as per D7's video yesterday, we're sitting right on that support level. So was the Dow, so was the New York Stock Exchange. I mean, so was just about every index out there. So we could have gone bullish today. That could have been very possible, and it was a very big possibility. Economic news this morning just did not allow that to take place. That being the case, where we could have gone bullish yesterday due to being in support of other indexes, here's the trade I would have taken, and here's the trade I tried to get on. Right here we can see we closed at 1833. So the trade I would have put on just before the close, I would be buying the 1825 long put on the NDX. I would then short the 1875. The reason for the 1875 is this is the upper trend line coming through here, and it's in that area. Now the options on the NDX trade in $25 increments. So it's either the 1900 or the 1875. Now I would have taken the 1875. So I would have put the 1825, 1875 would be a 50-point spread. I would receive a credit for doing so. Now this morning we had that gap down. To manage the position, here's what I do. We all know the gap strategy. Just every analyst on FTV has done a 30-minute gap strategy video. You'll find a ton of them on here. We love this strategy. It's an extremely effective strategy. We have several traders, for several members and FTV that love this strategy, and they do phenomenally well trading this. So here's the trade management here. We're in a bull put spread, which means we're in a bullish trade. If the market goes up, we're golden. The credit we receive, we're going to keep more and more the higher the market goes up. Now in this case here, the market gaps down. So the delta on the short put will be higher than the delta on the long put, which means when this stock goes down, the delta on the short put creates a loss. So right here we'd be losing money on this trade. So what we do is gaps down, we wait for the first 30 minutes like we would on a 30-minute gap strategy. So as we can see, we gap down, we trade, here's the 30-minute high, we trade down to a 30-minute low, and there's 10 o'clock right there. At 10 o'clock we break above that 30-minute high right there. Now you can see we do not close above. Without closing above right there, I don't need to do anything with this position as of yet. I'd be waiting to see if I can continue up. Now if I continue up, I just hold the bull put position, as this will recover the loss I'm in right now. If it does not, and we break below this low right here, what I do is I buy back the short put and hold the long put to the downside. That'll just put me in a bearish position. So initially I had a bullish position on. I can immediately put that into a bearish position using this strategy. So right here I'd cover that short put by breaking below that low there, and as you can see, we have come back up a little bit, and we just tank here for the remainder of the day. So the small loss I would have taken on the short put here, I would more than regained on the downside, and it'd be a major profitable position. And that's one way of getting into a trade here where you don't care what happens the next day, because based in this market right now, we're going to have huge volatility. We're going to have large range of movement. So you've pretty much high probability you regain your loss if this gaps down against you like it did today. And this trade here, if we had that trade on, I mean, that'd be huge profits. Think of the NDX here. Okay, NDX dropped 58 points today. That is like a stock dropping $58. It's identical. So if you are controlling put contracts and it drops 58 points or $58 and you got a delta of 50, you're making at least 50% of $58 in profit today. Thanks for attending freetradingvideos.com. There's a trade idea for Breakout. Until next time, Breakout out.